is the day after the presentation of the last State of the Nation address for President Cyril Ramaphosa for the 6th administration. Important to make that point because some people are saying it might be his last State of the Nation address, though we know he is running, of course, for re-election. But I think the important question we want to ask is how have the markets received that State of the Nation address? Traditionally, it has to be said, an event that doesn't move markets much. But when you've got a lot of information like we had last night, you have to ask the question, how was that? Okay, so let's dissect it. I'm going to be joined in studio by Qhivi Tiva. He is head of fixed income, Prowess Asset Management. Qhivi, thank you for your time. Also joining us for this conversation is Hannah Dino Brega, quantitative analyst, Prowess Investment Management. Thank you, Hannah, for joining us. Let me start with you in terms of how the markets have reacted before I ask for your opinion on how you saw that State of the Nation address last night.
I think the markets have reacted relatively well to the State of the Nation address. So he remained relatively boring, if I can say that, where he's continuing his previous policies that are already in place. They've started to gain a lot of tractions in the term that he's been already in. And in the last half hour of his address, he's mentioned a couple new policies and the signing of the NHI policy, which I think will come into play if and when he does get re-elected.
If and when he also finds the paper you seem to be suggesting last night. Just give us a quick take in terms of the fixed income market response to that State of the Nation address.
So if we break it down into him attaching a lot of the policy to state capture, so the places where that hurt us most was Eskom and Transnet. We're going to have to see some reforms in specifically those two industries, so the electricity industry and then the logistics industry. When it comes to Transnet, this is really a question of National Treasury and how they're going to respond with the budget. If there's going to be some sort of bailout in terms of debt servicing and how that's going to transform. There's also been a lot of legislation to allow private sector involvement in the logistics industry, which I think will allow investors to pile in a lot of upside there. And then when it comes to the Eskom situation, there's already been a lot of transformation into private sector investment when it comes to sustainable energy and solar power. So markets will definitely open up there. A lot more liquidity is going to open up, and I think markets will react quite well.
Absolutely. So I'm going to take your two words, positive and boring Cyril, to you, Qhivi. Yeah. Your interpretation?
Yeah, I think in terms of the positive, it was a very reflective SONA in terms of looking at the achievements over the last 80 years. And as with everything, it's either glass half full. It felt like a glass half full SONA. We're acknowledging some of the advancements that have been made over that period. And yeah, overall, it was positive from my side. From a market's perspective, as already mentioned, there weren't any major surprises. And as a result, from what you saw this morning is that bond markets were fairly muted after the SONA. Yeah.
What about the Rand? And I'm asking the question because we also, obviously, we did carry the statement live yesterday, and the Rand market to a large degree would have been closed because of the South African side not being the market, but the New York market being open. But we've seen overnight little movement. Yeah. How have you seen that?
Yeah, there hasn't been a lot of movement, I guess, post the SONA, and a lot of the movement that we've been seeing recently on the currency side or the bond market is largely been driven by what's happening in the developed bond market space. Yeah. And it just, again, goes to reiterate that the SONA itself was quite, I guess, positive, flat to positive from a market perspective.
Yeah. So you're agreeing with Hannah, it was positive, slightly positive as you moderate, and as well as a good boring in terms of the fact that the president did have nasty surprises, particularly considering, let's not forget, this is an election year in which the ANC may lose its majority, though they don't seem to be believing so. But I wondered your key takeaways in terms of the announcements that we had last night. Let's go past the politicking. Let's talk about about the initiatives that you spoke about that you think perhaps long term in terms of turning South Africa's economic trajectory, we could see an impact?
Yeah, I think a lot of the reform the announcements around the reforms are initiatives that fall under Operation Vulindlela between the presidency and National Treasury. And if you track the progress of Operation Vulindlela, I mean, that's what he essentially presented last night in terms of where they are around the various initiatives on the electricity front, opening the space for private generation, which is positive. And there has been some movement in terms of addressing load shedding, and I think from a market or forward-looking perspective is this acknowledgement that the impact of load shedding will slowly diminish as we progress throughout the year. And I think just talking around the next point around the freight and logistics,
Yeah.
and from a market perspective, what would be of interest, I think just looking forward to the budget would be around any likely support for Transnet. We saw last in December where they announced the 47 billion rand guarantee. So it'll be interesting to see whether there's additional fiscal support there.
Yeah.
And I think all that ties up in terms of the budget that we're likely to see, the deficit that we're likely to see, and how that ultimately gets funded.
Yeah.
Because should there be a need for the government to increase issuance or should there be an increased funding requirement,
Yeah.
that's likely to already increase an already high cost of servicing debt.
Absolutely.
Yep.
Yeah, in fact, I was going to try to make the point, and I'll come back to you as well for your input. To Hannah, if there were any hints, suggestions in that statement last night that could give us a reading of what potentially the upcoming budget could contain.
There could be some, so just back to the funding point, I think there's going to be a lot of scope into going into FRNs and then maybe some sukuks, because we can't really afford the traditional funding anymore. But the budget itself, well, the SONA itself didn't really allude to any hints into what the budget may conclude or what we may see in the budget. We must remember that there is no evidence of fiscal spending increasing in election years.
Yeah.
So in the past, we haven't actually seen government trying to win over or win a vote by increasing fiscal spending. So I don't think we must rely too much on the fact that it's an election year to see any type of expansion in fiscal spending.
Yeah, I take note of the points that you made earlier around the NHI as well as the ESCOM as well as Transnet reform plans. Did you hear enough, though, around the general reform program to give you hope that should perhaps the ANC come back in some form, either with a coalition partner or perhaps alone on its own, we could well see here a government that remains committed to economic reform as well as collaboration with the private sector?
That's a very good question. So I think when you're listening to the budget, what is said is very important, but what isn't being said is also something that's very important to take note of. So he mentioned that we have a bunch of growth reforms that need to be addressed. So there's a lot of water reform, water pricing, telecommunications reform, NHI, a little bit of education for young children. That's brilliant. But what he did leave out was maybe the health, sort of how the collaboration of a coalition might occur and how that might happen, how they'll coordinate the collaboration. So I think if the IFP, having been introduced into the elections as quite a prominent partner, will definitely reduce the risk of a chunky coalition, and that means that whatever the Gauteng coalition may be, whether it's DA or the EFF, and the Western Cape coalition, we at least have a third party in the KZN that will make the coalitions less consolidated or less chunky, less concentrated.
Yeah, we're in for some interesting times. No question. Your thoughts?
Yeah, I think I'll just touch on from the partnership perspective in terms of the partnership between government and business. Yes, and we've seen it from the energy crisis. There are various crises, committees that have been set up. Firstly, the electricity crisis committee. We're now seeing a logistic crisis committee. And I think there's also a joint committee looking at tackling crime. So I think from a continuity perspective, even though we might go to an environment of coalitions or at the political level, I think we're likely to see continuity on that side in terms of business and government working closer. And we're seeing some of the benefits there in terms of what we're seeing on the energy sector, and hopefully they'll be successful in addressing some of the challenges we see on the logistics sector.
Yeah, let's talk a little bit about the NHI, because let's be frank, going into this thing, I think some people were saying, let's see if he says something substantive, and some people were saying, let's see if he withdraws that bill. But then he said he was looking for a pen with which to sign the bill. Your thoughts in terms of what he said? I just caught two words. The NHI, okay, maybe more than two words. The NHI will be implemented incrementally. What does that mean?
Yeah, I think there are a lot of...
What did it mean to you when you heard it?
Yeah, I think there are a lot of contentious issues around the bill itself, and I think it will take a while for it to be implemented to the full stage. And I think that's an acknowledgement of that differences around some of the key aspects. And
it's listened to the private sector to an extent who are saying, you don't have the money to do this, please change course.
Yeah, exactly. I think it'll be, it's very unlikely that it will be signed and implemented in full. At the moment. And like I said, I mean, him saying he's ready to sign, I mean, you could interpret that as, we know our president is very conservative and likes to take his time. So I'll be very surprised if we hear an imminent signing of that bill.
Absolutely. I want to ask you the same question that I asked Hannah around taking what you said last night into some thinking around what potentially that could mean for the national budget coming up.
Yeah, I think a lot of the stuff that was mentioned was new, were already existing objectives. There weren't any new programs that were introduced that would require additional funding. So I think from that side, I think you also mentioned around continuing to be prudent from the fiscal management side. So I don't foresee any significant changes, even though we are, as you mentioned, in an election year. So so from a budget perspective, no new surprises as a result of what we heard last night.
Yeah. So Hannah, while we have you, let's talk a little bit about 2024 as well. Take into account what the president said. Take into account, we know there's a national budget that's coming up on the 21st of February. I wanted to know your growth projections for the year. I have been seeing numbers that say, and it sounds impressive, as Gulam was saying yesterday, impressive to say we might see a doubling in economic growth in 2024. But I wanted to know your numbers and what you think will be the key drivers for growth this year.
Thank you for that question. It is quite a prominent question, and it's very difficult to estimate. So if we consider a base case scenario where the continuation of all the bills that are very growth orientated, such as electricity, Transnet, water, and telecommunications, or access to telecommunications for all income groups, we could potentially see a pickup in growth. There's also inflation that's coming down quite nicely. The job market is relatively open. So there's definitely scope for additional growth. There might be some downside surprises. So geopolitical polarization is definitely a risk. Natural disasters is quite a big risk, and then also disinformation and misinformation is something we have to really be aware of, and that might make the job market a little bit tighter than we would like it to be. As for growth numbers, it's difficult to put out an actual number, especially if we consider the past and how much COVID has completely skewed our results and skewed our data. So the projections that have been put forward by the markets has been anywhere between 0.2% and then all the way up to 3%. It's really difficult. That's quite a big, it's quite a broad band. And there are so many upside risks and then also downside risks that have to be considered. But base case, we want to estimate somewhere in between there.
Sure. I'm hoping that the Ukraine war will end and we'll see some growth kicker coming out of that. And of course, that the Middle East war will end as well. Call me a pacifist if you can. Your outlook for the rest of the year as well?
Yeah, I think she's already touched on a lot of the dynamics at play. I think one additional thing is the elections. I think I saw a state around.
How big a risk is it, do you think?
It's always a risk looking at some of the countries where the elections are taking place, the US, and yeah, I think it's always a risk, but I think more in the background around some of the imminent crises that we have, the Middle East, the Russia-Ukraine war continuing, and some of the disruptions that we're seeing in the shipping channels around the globe. Yeah. So from a contributors for growth for this year, from a personal consumption perspective, with interest rates hopefully coming down later in the year, that's positive for you and I, and that's likely to be a positive contributor to the economy. And yeah, there are, I think, positive signs, and also from like the disruption from load shedding that's likely to ease as we go for the rest of the year. Absolutely. So there are positives in the horizon. I think, as things stand, we're likely to be in a better place. Like you said, we're likely to double the growth from 0.6 last year to 1.2 this year.
I wanted to borrow the words of the Central Bank Governor of South Africa, Governor Lesetja Kganyago, and he says the balance of risks is weighted to the upside or to the downside. And I wanted from your side, whether to the upside or from the downside.
Fairly balanced, tilting to the upside.
Fairly balanced, tilting to the upside. Hannah, thank you very much for joining us this afternoon. Hannah D. Nobrega, Quantitative Analyst, Prowess Investment Managers. Thank you, ma'am. Qhivi, thank you again for coming through and joining us in studio and chatting to us. He is Head of Fixed Income at Prowess Asset Management.